80% of freelancers say they couldn't comfortably handle a $1,000 emergency expense. If that's you, this video might be the most important one you watch this year. I'm going to show you exactly how much you need in your emergency fund as a freelancer, why the standard advice is wrong for us, and give you a simple system to build it even when your income is unpredictable. Note: this information applies to US-based freelancers, though the core concepts work internationally. Welcome to the Freelancers Wealth Blueprint, where we turn complex financial concepts into clear action steps. Subscribe for weekly videos on building wealth as a freelancer. Let's start with a hard truth. The standard advice says save 3 months of expenses. That's fine if you're an employee with a steady paycheck, unemployment benefits, and maybe even severance if things go wrong. But you're a freelancer. You get none of that. When an employee loses their job, they can file for unemployment and receive benefits while they search for a new position. When your clients dry up as a freelancer, you get nothing. Zero. You're not eligible for unemployment because you don't pay into the system the way traditional employers do. No unemployment. No severance. No safety net. Just you and your savings. That's why 3 months isn't enough. For freelancers, I recommend a minimum of 6 months of living expenses. 9 to 12 months is even better. And if you're the sole income earner for your family or you work in a volatile industry, aim for the higher end. Let me explain why. First, income gaps can last longer than you expect. A client project ends. A contract doesn't get renewed. A slow season hits. Rebuilding your client pipeline takes time. Networking, proposals, negotiations, onboarding. Even when things go well, there's often a gap between landing a client and getting paid. Second, you're responsible for your own benefits: health insurance, disability coverage, retirement contributions. These don't stop when your income does. You need cash to cover them during dry spells. Third, business expenses continue. Software subscriptions, professional memberships, equipment. Some of these you can pause, but many you can't without damaging your business. So how do you calculate your emergency fund target? Here's the simple formula. Step 1. Calculate your monthly survival number. This is the bare minimum you need to keep your life running. Rent or mortgage, utilities, groceries, health insurance, minimum debt payments, transportation. Don't include dining out, subscriptions, or anything you could cut in an emergency. Step 2. Add essential business expenses. What do you absolutely need to keep your freelance business alive? Maybe it's your internet connection, a software subscription, or professional liability insurance. Add these to your monthly number. Step 3. Multiply by your target months. For most freelancers, that's 6 to 12 months. Let me give you an example. Say your monthly survival expenses are $3,500. Your essential business costs are $200 per month. Your total monthly need is $3,700. At 6 months, your emergency fund target is $22,200. At 9 months, it's $33,300. At 12 months, it's $44,400. These numbers might seem high, but remember, this isn't money you're spending. It's insurance. It's peace of mind. It's the difference between making smart decisions and making desperate ones. Now, where should you keep your emergency fund? The answer is simple: a high-yield savings account. Not the stock market, not crypto, not even bonds. Your emergency fund needs to be boring, stable, and instantly accessible. Right now in January 2026, you can get around 4 to 5% APY at online banks like Vero, Newtek Bank, or SoFi. That means your $30,000 emergency fund earns you $200 to $1,500 per year just sitting there. It's not going to make you rich, but it's a lot better than the 0.39% national average at traditional banks. Keep this money completely separate from your checking account. Out of sight, out of mind. You don't want to accidentally spend it on something that isn't a real emergency. Speaking of which, let's define what counts as an emergency. A real emergency is unexpected, necessary, and urgent. Your car breaks down and you need it for work. A medical bill hits. Your laptop dies and you can't work without it. These are emergencies. A vacation is not an emergency. A sale on something you want is not an emergency. Taxes are not an emergency because you should see those coming. One more thing. Your emergency fund is separate from your tax savings. If you're setting aside 30% for taxes like I recommend, that's a different account with a different purpose. Don't mix them. Okay, so how do you actually build this fund when your income is unpredictable? Here's my system. Strategy 1. Pay yourself first with a percentage. Every time money comes in, immediately transfer a fixed percentage to your emergency fund. Start with 10% if money is tight. Increase to 15 or 20% as you can. The key is consistency. 10% of every payment adds up faster than trying to save whatever's left at the end of the month. Because let's be honest, there's never anything left at the end of the month. Strategy 2. Use windfall deposits. Got a bigger than expected payment? Tax refund? Bonus from a client? Take at least half and put it straight into your emergency fund. These irregular chunks can accelerate your savings dramatically. Strategy 3. Set milestone targets. Big numbers can feel overwhelming. Break it down. Your first milestone is 1 month of expenses, then 2 months, then 3. Celebrate each milestone. Track your progress visually if that motivates you. Strategy 4. Automate everything. Set up automatic transfers on the days you typically get paid. If your income is irregular, set up a weekly transfer of a smaller amount. Automation removes willpower from the equation. Strategy 5. Cut one thing. Look at your expenses and find one thing you can eliminate or reduce. Just one. Maybe it's a subscription you don't use. Maybe it's eating out one less time per week. Redirect that money to your emergency fund. Small cuts compound over time. Let me give you a realistic timeline. If you're starting from zero and your target is $22,000, saving $500 per month gets you there in about 44 months. That's just under 4 years. But if you can save $1,000 per month, you're there in 22 months. Under 2 years. And if you combine regular savings with windfalls, you might hit it even faster. The point is, start now. Even if you can only save $100 per month, that's $1,200 in a year. That's better than nothing. And once you have momentum, it gets easier. Here's your quick action plan. Today, calculate your monthly survival number plus essential business expenses. This week, open a high-yield savings account if you don't have one. I'd look at Vero, Newtek, SoFi, or Ally. This month, set up an automatic transfer. Even $50 per week is a start. Ongoing, increase your savings rate whenever possible. Direct windfalls to this account. Your goal is to reach a point where a $1,000 emergency is annoying, not devastating. Where losing a client means tightening your belt, not losing your apartment. Where you can make business decisions based on what's smart, not what's desperate. That's financial freedom as a freelancer. And it starts with your emergency fund. If this was helpful, hit subscribe. We post new videos every week on freelance finance. And remember, this is educational content, not financial advice. Your situation is unique, so consider talking to a professional for personalized guidance. See you in the next one.